Alex Kingman here with KGI Capital. I would like to share a story with you about a deal that we offered on about a week ago. One of my brokers in Texas reached out to me and asked me if I'd be interested in an off-market property that was actually an REO property, meaning that the lender had taken it from the previous operator. It was in a great area in a thriving tertiary market, just about 30 minutes outside of the main city, and it was directly in the path of growth as well. So it was already an interesting opportunity for me to look into. Even more interesting, since it was an off-market deal and hadn't actually hit the market yet, very few people knew about it. So we had a unique opportunity to jump on this if the numbers made sense and to take it off the market before it got that far. After our initial quick analysis, the numbers looked really, really good. So I immediately sat down and underwrote the deal because with the numbers I was seeing, everything else could wait. The projected equity multiple was over 3x, meaning that investors were projected to make 3 times the amount that they invested initially into the deal. The IRR was over 20% for LPs, and the cash on cash was super strong. So after going through this deeper dive in the underwriting, we immediately sent an LOI. For those of you not familiar with what an LOI is, it's a non-binding offer to the seller. To give you a little more background on the actual property itself, it was a Class C plus, could almost be a B property with a little bit of elbow grease. It had about 80% of its units still in classic condition, so there was room for renovations. And there were a handful of other issues that typically come with this type of distressed property, such as poor management, bugs, some roof leaks, some mold, and some residents that probably weren't qualified to actually be living there. However, still with all of these issues and taking that into account in our CapEx budget, the deal still looked fantastic. So we knew that there was probably something that we were missing that we didn't know about this deal that would come up during our due diligence, because based on the financials and the occupancy rate that they shared with us about this property, it made no sense as to why they would sell it at such a big discount, even as the lender. So we were on the lookout for what was missing, but we weren't going to let this deal slip through the cracks without at least looking deeper into it. Because we jumped on this deal so quickly, we were able to be one of the first buyers to offer a number to the seller. And being that it's lender owned, their main goal is to look for an operator that is sure to close. They're looking for a very strong operator. And since they already had to foreclose on this property and take ownership of it, they wanted to recoup some of their losses by also offering an option to be able to work together with the new seller to issue a new loan on the property. So they really liked our offer, and so we started having a little bit deeper conversations about the property and about the terms and everything. And that's when some discrepancies came up. It turns out that some of the financial information that was shared with us originally was actually incorrect. And so it ended up not being a very good deal. It changed the deal significantly. And so we ended up having to walk away from that one. But the truth behind all of this is that we're starting to see more and more of these kinds of opportunities pop up. And while a lot of times the numbers are still too high for them to pencil at this time, we see this trend continuing. More of these properties are going to be coming in the pipeline. And based on where I see the economy right now and the Fed being a bit reluctant to cut interest rates anytime soon because the economy is still chugging along pretty well and inflation hasn't been really curbed like they would like for it to be, I see that we're going to have these types of properties popping up more and more, and I see that they're going to be dropping their asking prices. So it's just a matter of time and being in the right place at the right time and having the relationships in place in order to capture those deals when they come. Now, had all those numbers been accurate on this deal, it would have been a killer deal, but that's okay. It's all part of the acquisition game. We're just continuing to look at deals. We've got plenty of deal flow right now, and when we find one that makes sense, we'll jump on it just like this one. This is what we do day in and day out. We look for the best deals that we can go in and add some sort of value to and fix it up and everyone gets to profit. So if this is the type of investment that you'd be interested in passively investing into, then you can reach out to me. Let's set up a call. We can talk about your investment goals for the year and see if we're a good fit. You can also subscribe to our newsletter, which will help you become an expert at passive investing. Thanks so much for watching and listening to this story, and please subscribe so you can get the next video.